Hey, good morning, everybody. It is Thursday, July 2nd, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time on Facebook and YouTube. This morning, I am encountering an error with our text service not sending out properly. Lovely. So we'll see what that is about. But anyway, that is it looks like just a technology thing. So anyway, if you are here this morning, say good morning. Did you know that July 2nd is actually Independence Day, or it really should have been Independence Day? I'll tell you why in a couple of minutes. Let's let everyone hop on. Good morning, Sean Segeloff. Good to see you here. Hope everybody is able to remember on this happy Thursday what today is about. Looks like they're having an issue over at Keep this morning. Software that we use for a lot of our services. Hopefully they get that resolved in a little bit. So anyway, if you're here this morning, say good morning. And Ron Siegel said today is National I Forgot Day. I forgot about that. We got 8 people on. Shows you how important those text alerts actually are. Good morning, Carmen Amuendo. Good to see you here. So did y'all know, while we're waiting for everyone else, did you know that July 2nd should actually be Independence Day? Let me go ahead and share my screen. I'll show you what Google has to say about it. July 2nd should theoretically be Independence Day. Watch out, Sophia. I'm trying to do my thing here. You can see that right here. Should theoretically be Independence Day because it is the exact date that the Second Continental Congress actually voted to declare independence from Great Britain in 1776. The crucial vote on the Lee Resolution severed political ties, making it the true legal moment that the colonies broke free. And this is attributed to the Idaho Capitol Sun. Founding father John Adams strongly argued for July 2nd as the permanent holiday. In fact, he even wrote a famous letter to his wife Abigail on July 3rd, predicting that the second day of July would be celebrated by future generations with parades, games, bonfires, and drone shows. The reason we celebrate on July 4th is simply that is the date the Continental Congress formally adopted the wording of the written Declaration of Independence. It took them 2 days. July 4th became popularized because it was the date printed on the first public copies, essentially serving as the formal announcement of the vote that had taken place 2 days prior. So look at that. That is just something fun trivia, fun fact as we celebrate July 4th. But anyway, all right, let me try one more time and see if this thing has woken up yet and if we're able to send a text. Oh, we are. Hold on. Let me send it. Sorry for the late text. Hurry up and join. Here we go. Let me send that. We'll remind everybody. Let's see what the numbers do. We've got 18 people on. Watch that jump. So, Mike, I just got to notice you were live. You were already on for 52 seconds. Yeah, man. The text service, there's a tech issue. It was glitched and I couldn't send out my text. So just sent it out now. It'll go out. So anyway, let's take this up from the top. Welcome. It's Thursday, July 2nd, 2026. So glad y'all could join me. Remember, it is something I do each and every weekday morning at 9:30 a.m. Eastern Time, broadcasted to you on Facebook and on YouTube. If you want to get a text reminder that I'm going live, which just went out because the text service had a glitch, you can sign up at hmmr.io/reminder or use this cool QR code here. We were at 18 people. I bet you we get a whole lot more joining now that we sent out that text. So anyway, you can also get that text reminder. You can also sign up for our free daily email lock advice, www.ratelockadvice.com. You can sign up for our text alerts at www.ratetextalerts.com. And you can start winning loans online at originatorssuccess.com and Grab and Go Social. And in fact, I'm going to do a webinar tomorrow. So I'll tell you guys more about that in a minute. I'll do that as we get through a little bit more of it. So anyway, I was stalling a little bit because yes, I did have a problem with the text alert service. So it was causing us to start a little bit late, but let's go ahead and get started. And again, welcome to all of the live folks that are on. The lock advice for today, by the way, which I'm going to tell you why, is to lock anything closing the first half of the month. Today is July 2nd. Anything closing the first half of this month. And then we're cautiously floating the rest. So let's go ahead and take a look at what we got going on this morning, and we'll go from there. So if we take a look at the technicals, you can see that mortgage-backed securities are currently up. At the moment, the 5.5 coupon is up 9 or 10 basis points on the day. 10-year Treasury yield has stayed below 4.5, fallen back below 4.48. It is at 4.47 at the moment this morning. Quick focus on what happened today. Rate sheets are going to be unchanged to worse from yesterday. You're not likely to see too much of a change. If you take a look at rate sheets here, they're on that higher end of the range. By the way, yesterday I pointed out that it was like 5.54, I think, and I said there's no way. And it looks like Matt Graham went and corrected that, and it's up to 6.6 on where things were at for Tuesday. And when we saw, so many reprices worse through the day and everything. So yesterday, 6.65. We'll see a little bit of improvement today. I can actually change that unchanged to slightly better instead of worse. Slightly better. When I wrote this the first time, bonds had actually drifted down a little bit more, and they were actually a little bit lower. So let me go ahead and let me pull this over, and I'll show you guys a few different things. So hold on a minute as I make some tweaks here. All right, so as we come over here, looking at what's going on with mortgage bonds, mortgage-backed securities, all that good jazz. Let me bring this up so we can scroll through the page and you won't miss what's on the bottom. All right, so we had the BLS jobs data hit this morning, and we've been, my advice yesterday had been to lock ahead of this data, and I'm still really glad that we did. Yes, I know that bonds have improved a whopping 10 basis points this morning, but if you look, when pricing came out yesterday, we were right around, you're right around 100.25. Right now, we're at 100.28. The reason that we're up 9 or 10 basis points is because we lost ground yesterday afternoon. You can see here around 2:30, they were still at 125, ended the day down around 100.17. So this morning, we're only making up the gains of what we lost yesterday. So it really is no improvement. Now, this morning, take a look. Before the data came out, you could see that bonds were down lower in overnight trading, continued lower. Of course, you could see exactly when the BLS jobs data came out. So the BLS jobs data came out, 57,000 jobs created, much less than the 115,000 jobs that were expected. Unemployment, though, was better, 4.2% unemployment instead of 4.3. Now, this first stat, the 57,000 jobs created being a lot lower than the 115,000 jobs expected, that would be good for bonds. And then the second one, the 4.2 unemployment being lower than the 4.3 is actually bad for bonds. However, the 4.2% unemployment was attributed to so this is Sophia. She wants to come over. You always pick when I'm trying to do my stuff to come over and sit on my lap. So anyway, the 4.2 unemployment would be better. However, the participation rate, the number of people that said they were actually looking for jobs has gone down. Less people in the labor market, which is going to lead to a lower percentage of people that are unemployed, because rather than being unemployed, they are just not looking for a job anymore. So that's why you're seeing a bit of a reaction. Now, we saw a very, very strong positive reaction. Again, the headline was the number of jobs being created being much lower. We saw a big relief rally is exactly what this is. This is a relief rally. This is bonds that were in a position where traders were in a position, rather, where they expected labor market data that it was going to come in strong. They expected labor market data that was going to support the idea that the Fed is going to hike rates this year. Instead, this is a lighter report, but we're only up a whopping 9 basis points. Now, we did see a big swing here. As you can see, it went from all the way down to the lowest level of the day, which if we look at today here, the lowest level of the day is 100.07. So it was down here at 100.07, and it bounced up to the highest level of the day, which we could see is right here after that data came out. That would have been a high of 100.37. So there was a 30 basis point swing from that move. And you could see the candlestick, the wick right here is much higher. Let me refresh this, see if that changes shape at all. All right, so the wick of the candlestick is the high, and then right now we're at the body. The body is testing the 50-day moving average, this red line right here. That 50-day moving average today at 100.29. Right now we're at 100.30. It's the same thing because we're rounding. So we are testing that red 50-day moving average. And part of that is why I am in a locking stance where I would be locking anything that's closing in the next couple of weeks. So the bond market closes today at 2 p.m. Eastern time. It's closed tomorrow in observance of Independence Day, which if you got on late, did you know July 2nd should actually be Independence Day? We covered that. That was when the actual vote to secede from Europe, from England, that was when it actually, the vote went through, was on July 2nd. So, but anyway, if we go ahead and take a look at the lock advice, and the lock advice being that I would be closing anything closing the first half of the month. Next week, we've got there's nothing big going on in the economic calendar. There's no reason to expect anything that's going to help push rates significantly lower. We could see a little bit of drift, but for loans closing in the next couple of weeks, we want to kind of protect from what could happen that we don't know could happen, right? So I had been in a locking stance for the last few days for sure. I'm going to remain in that locking stance for now. And again, we're very much in that same range that we have seen rates be. Like you got 6.66 here, 6.68 here. This is the beginning of June. In the last month, rates have topped out around 6.68, and they've gotten as good as 6.53. We're really, really holding steady within 1/8 of a point on rates. Rates have been very stable. We're when it comes to locking loans, you're basically trying to maximize rebate pricing right now. That's not likely to change heading into next week. We're not likely to see rates themselves move significantly higher. When I say significantly, I mean a quarter point or more. We're not likely to even see them move another 1/8 of a point higher. Right now, we are in the high point of that range, right at that 6.65 mark. It could go a little bit worse, but it's not likely that things are going to get much worse than where we're at right now. We're very much in that range, and that's where we are very likely to continue to stay, is in that range. Next week, again, there is really nothing going on. You got the FOMC meeting minutes, but I don't think that's really going to change anything. One thing that will be different under the new Fed, under Kevin Warsh, is he's really looking to eliminate the idea of forward guidance. And when you have Fed speakers, he's going to be applying pressure that they're not trying to manipulate markets and forecast where things are going to go. He's going to want them to get a little bit better at avoiding committing to where things are going to be. Now, when we got this jobs data this morning, it did help on the front of where would we see a rate hike. Get down, girl. Get down there. I got to do this. Okay. So if we take a look, we're up to about 80% expectation that the Fed fund will stay exactly where it is at right now. That is up from 67% a week ago. So it's slightly better. Markets are anticipating that there will be much less of a need or much less discussion of a Fed rate hike at the end of the month at the July meeting. This jobs data does, technically put some pressure that if the Fed were to hike its Fed funds rate, that pressures the labor market. All right. So if the labor market data came in very strong, that would open the door for a Fed rate hike. But because that data is has come in a little bit weaker, less jobs created, it's not as strong of a market, even though unemployment is better. Again, the participation rate is down, so that washes. So there's an expectation here. We're not going to get CPI inflation data till July. I think it was the 12th or the 14th. I think it's the 14th, July 14th. So it really, next week, there's nothing that we can expect that's really going to help rates improve. So you're just looking at rebate pricing. And again, once again, rebate pricing very much in that range. I mean, if we really look at this and put this down, let's make this even shorter. We'll try to make this. There you go. I mean, you can see we're very much in that same range that we've kind of been right here and right here. We've got a little bit of room to the upside. I don't think we're going to have to worry about necessarily hitting that worst level back here in May, but we also are not going back to those April lows either. So these are off the table right now. I don't think we really have to worry, and we're very much in the range. Locking anything near term, I know it. Why would you lock when you're at the worst level, when things are higher? Because there's too many unknowns and too many things that could happen. But anything that's got closing the second part of the month, I think we've got time. So anyway, Eileen said she locked someone in for 45 days, closing 8:15. You certainly you can't go wrong. I mean, again, there's not any expectation that we're going to see significantly better rates in between now and August 15th. You're talking 45 days from now. So Bank of America calling for 3 rate hikes this year. Yeah, I think that sounds nuts. What do you think? What does everyone else think? Ron, I think that Bank of America calling for 3 rate hikes this year, that just sounds crazy. I think if we do see a hike, we'll see 1 hike. And I don't necessarily know that we'll see a hike. I think that Kevin Warsh, new Fed Chair Kevin Warsh, is going to try to show more accurate representation for the trends on where inflation is going, that we wouldn't necessarily see a rate hike. I also think that we'll see inflation ease. We'll see what's called disinflation, not deflation. Deflation is when prices go down, negative inflation. We're not going to see that. Prices are not going down. Disinflation is when prices go up at a slower pace. It's inflation, but it's lower than where we have been. And I think we go back to disinflation now that gas prices will start to come down, and that can alleviate some of the pressure. Now, what's funny is some economists have said that lower gas prices put more pressure on heating up the economy, which causes inflation. You can't win for losing. You're with Mohammed El Arian. He is way smarter than you. Also friends with Kevin Warsh. And what did he say? CPI is July 14th. PPI is July 15th. Thank you, sir. Okay, I see where you said about him. He said rate cuts and rate hikes are completely off the table for this year. I agree with that. I think that basically this is the level where we're at. I think mortgage rates are very much going to stay in this range that we're at. I think consumers are getting used to it. The 6s are less scary than the 7s, but not as attractive as the 5s. I think that's it's been a mental platitude. I haven't written loans in 20 years, and yet that was always a big thing, even for us back then. I mean, the 6s were always a certain kind of window there. CPI might show negative due to lower gas prices in 49 states. Yeah, it could show some, well, I don't know. I still don't think it would show deflation. I think it would just show disinflation. Even if we look at core, we'll see. There's enough other stuff going on. So we got plenty of time to talk about that. Anyway, hope you all have a fantastic one. I'm going to throw this link up on the chat and a QR code. So here's the deal. I am going to start doing webinars again. I haven't done webinars in a long time. I'm going to do a webinar tomorrow. I don't expect, it's kind of like my warm-up webinar. It's going to be 30 minutes. I don't think webinars need to be an hour, especially a few of the ones I've sat on, they spend 20 minutes talking about how great they are. It takes too long to get into these things to get 7 minutes of value. It takes an hour to get 7 minutes. And it's not even that they sell. And I got to tell you something. If you're going to sell on a webinar, that's fine with me, but then sell. Don't be a bitch. This webinar is going to highlight our products. I'm not going to lie. But the value will be there even if you don't. It's just going to be what, our products implement for you, what we're going to be showing you to do. It's just done for you. So, but we're going to be going over. Let me throw that link up. Let me see if I have it, that Zoom link in my, let's see. I'm going to type it here. Control. There it is. Let me know if this Zoom registration link works. There you go. Can't post message on some channels. Yeah, I know. That's fine. There you go. So, and then let me put a QR code real quick. I'm going to add a new QR code. Winning Loans Online series. I'm just creating this one real quick. So if anybody wants to hop on, I didn't really think of this ahead of time. So this is the Winning Loans Online series, secondary text. I don't even have a short link. I just have the straight up Zoom registration link. There's no sales page. There's no anything. So if anybody wants to join me, I'm going to show you how do you get 3 loans the second half of this year from Google and AI search. I'm going to show you some of the things that we do at Originator Success to set up our members to get business. There's a lot of things happening with AI search, and I see a lot of bad information out there, especially from other mortgage gurus. And it's kind of aggravated me. So I'm going to get back in the fray. Also, I want to, I haven't been promoting our products for years and really need to promote them harder. A lot of you are missing out. I kind of had stepped away from the sales side. And I feel very strongly about our products. We get every week, I won't say every day because that would be a lie, but every week we get testimonials and, stories of people that are getting business. And I tried to think about how many loans we've actually been responsible for, because it's hard. How do you track that, right? If somebody contacts you and they found you online, or they decided to work with you because of your online resume, your reviews and all of that, there's no way for us to track that. So with as kind of, fuzzy math, but just the fact that I look back at the webinar slides, we've been doing this for over 7 years. And in that time, like when I did a webinar back then and we were tracking things, we had talked about, like, it was like 400 loans that we had created. And this was like 7 years ago. So it's got to be thousands of loans. And I know that sounds far-fetched. It sounds far-fetched to me, but we've got to be responsible for thousands of loans at this point. Dare I even say above 10,000, right? I don't know. I'd have to do the math on the number of members and averages and such, but thousands of loans. There is that much business online. So if you're an Originator Success member and you want to just pop on, feel free. But mainly this is absolutely for those people that are not Originator Success members. This is stuff that we do automatically for our members and our sites and stuff. So, Sean said, you're not seeing the link on Facebook. I'll try to post it again, my man. Can I send the Zoom link out in the text message system? Thank you for setting me up for that, to do that without feeling like I abuse it. You're awesome. I will see about doing that. Fed member Beth Hammock said the gas inflation comment. Thank you, Mike Tebow. Yeah, I was laughing about that one. Too funny, his webinar, spending 24 minutes of him talking about himself. I don't know, who are we talking about on that one? I got to go through the chat and see. Yeah, I mean, some of the webinars, dude, their webinars suck. And then they share things that are so whatever. It's like, give me a break. So I'm going to do a webinar. It's part of our Winning Loan Online series. And this is, like I said, this is a warm-up webinar for me. It's not going to be anything amazing on the slide deck or anything. The value will certainly be there, but I'm going to start doing a lot more webinars about things that we have information on that I don't share anymore. How do you rank on Google? What's the difference between Google and AI search, and the myths and, legends around AI search lately? There's a lot of stuff and it's all garbage. So we're gonna break some of that stuff down. We're gonna get into reviews and how to generate reviews. I'm not doing all of this on one webinar, by the way, because these are in-depth topics, but I'm gonna start doing a webinar series. That's why. And it's all about, I realized that I always say that we're about getting loans from Google, AI search, and social media. It used to be Google and social media, but now you got to put AI search in there too, right? So, but all of that, what it really breaks down to in the simplest level, is winning loans online. You are out there fighting in the trenches. You could be getting business, people that find you organically. You can be winning loans because you're out there talking to real estate agents. And when they refer you to other people against other people, people make that decision online. So we'll see. So I'm going to send out an email on this, Ron. You'll definitely see an email. I'm going to fire off an email to a lot of the list on this. You've been getting a lot of reviews lately from Originator Success. That's awesome. Thank you, sir. It's as bad as Facebook. You watch this 2-minute video, but watch this for 30-minute video before. Yeah, dude, it really, like, I see a lot of, and again, I'm sitting here chatting. We're just talking, like, you know, the number of people on here today are just the ones that are just hanging out with me. But it really does. Anyway, enough. I'm going to wrap it up. You guys have a fantastic day. I appreciate you. I'm going to take a picture of Mr. Ron's comment because I love to do that. So bear with me a minute. Let me pull this up and close this. And come on, give me that. There we go. All right. So I got that screenshot. Thank you, sir. So, all right, y'all, I'm going to wrap it up. Hope you guys have a fantastic weekend. I will see you on Monday. Stay safe and have fun. Goodbye.